Welcome to the Financial Integrity Hub's podcast. The Financial Integrity Hub pioneers research and explores how law and governance strategies can be designed, implemented and enforced to support anti-money laundering and counter-terrorist financing. This podcast is proudly sponsored by Identity, a RegTech providing financial institutions assurance that they are meeting AUSTRAC reporting obligations. The platform allows regulated entities to gain visibility over transactions, improve auditability, automate manual processes, and reduce the risk of non-compliance. Your host is Isabel Nicholas. Isabel is a researcher at the Financial Integrity Hub. She teaches financial crime at Macquarie Law School and interviews global and domestic experts on trends and market insights for the podcast.
Welcome back to the Financial Integrity Hub's podcast. Today I'm joined by Luke Raven, and we dive deep into the world of financial crime compliance and risk management. In a recent conference, we heard from Leanne King at AUSTRAC, who stated that AML-CTF risk assessments have been found deficient for not adequately assessing risk with the nuance necessary to comply with regulatory standards. For example, when categorizing a customer's risk level, some entities employ a simplistic approach by utilizing solely low or high risk classifications instead of implementing a more sophisticated gradient assessment. In this episode, we unravel the flaws of a ticker box approach to AML-CTF and shed light on the need to comply with the risk-based approach to managing financial crime. Prepare yourself for captivating tales of suspicious matters and fraud. We discuss whether statutory expectations and industry standards go far enough to calculate and mitigate AML-CTF risks. With the ever-evolving advancements in technology, we consider whether the future of compliance, KYC, and CDD could be enhanced by artificial intelligence. And finally, if you're interested in maximising the effectiveness of AML compliance training, Luke tells us his tips to ensure we can train talent to fight financial crime. Thanks to our listeners for tuning in. You can find our previous episodes by searching the Financial Integrity Hub at Macquarie Law School on LinkedIn or on Macquarie University's website. Welcome back to the Financial Integrity Hub's podcast. Today I'm joined by Luke Raven. Luke is a senior money laundering reporting officer at Capital, an expert in the field of AML-CTF compliance, benefiting from comprehensive experience in the related areas of KYC, ECDD, sanctions, fraud prevention, and merchant risk. Luke believes achieving the minimum legal compliance standard isn't the goal, but the starting point. He has extensive experience implementing and upholding internal programs which exceed industry standards and statutory expectations. Luke insists that good compliance isn't just doing enough, it's doing what's right for the business, the customer, and the community. His dedication to disrupting financial crime and managing risk goes hand in hand with his advocacy for the customer's experience. He believes suspicious matter reporting, beneficial ownership verification, and transaction monitoring programs are paramount to creating an environment that is welcoming to customers but hostile to bad actors. Great to have you join us, Luke.
Thanks so much for having me. Pleasure to be here.
Let's get right into it. Firstly, I'll start by asking, what are the statutory expectations or industry standards for AML-CTF compliance?
Sure. So I'll deal with them sort of separately. Statutory expectations in Australia are actually pretty simple at a high level, whereas industry standards are a little bit different. So for statutory expectations, you have to perform a risk assessment, develop a compliant AML-CTF program, and then comply with that program. This basically covers everything else, because if your program's not good enough or it's fine, but then you go and breach it, then by default, you end up breaching the Act and your statutory obligations. So the devil's definitely in the details when it comes to this. For industry standards, they're a bit harder to quantify. They include questions like who actually owns or controls this customer, and how many degrees of separation from a PEP do you need to be before you're no longer their relative or close associate. Unfortunately, there's very few one-size-fits-all answers to these types of questions. There's some practices which are basically universal, though, like saying we can start with what a corporate customer tells us about who owns them, but we won't just trust that. We'll go and look at company documents to verify it.
Right. Do you think that the industry standards go far enough in terms of ensuring that there is effective AML and CTF efforts?
No, look, to be honest, not always. There's an attitude in some businesses, and you sort of got at it when you were reading my bio there, that the compliance is ticking a box and nothing more. And when they adopt that approach, unfortunately, they tend to do the bare minimum that they think they can under the law. Now, this isn't actually consistent with the law, I'd like to point out, because no matter how closely they read it and try to find the minimum viable compliant process, it's actually not using what's called a risk-based approach, which is what we have to do. It's inherent in all of the guidelines and legislation. So taking the approach of least resistance and friction and cost and disregarding the actual management of risk isn't a risk-based approach. Luckily, though, I do think that with such an active and engaged regulator in Australia and more discussion of AML, sanctions, fraud, all of these items in the news, both in Australia and internationally, these financial crime topics aren't going away. And so the attitude around this is really transforming in Australia.
So if we know that an organisation's monitoring program identifies suspicious customer transactions or behaviour, the organisation then has to apply enhanced customer due diligence and submit a suspicious matter report to AUSTRAC. So I guess from your experience, what's an interesting or kind of bizarre example that's raised alarm bells for you or made you consider the matter a suspicious transaction?
Sure. So I've got lots of great examples and juicy cases. I think this is a series of podcasts, so you may have lots of those. I won't sort of regale you with tales of terrorist financing or anything like that at this time. I'll tell you one of my favorites, though, if that's okay. It's not about a huge criminal syndicate or especially compelling crimes. It's actually about the customer experience of an SMR, which is something that's rare in itself to sort of speak about. So basically what happened is we noticed that this lady's physical card reader got linked to a new account, and that account started processing stolen cards. Whoever now had the card reader had bought cards online, card numbers online, compromised ones, and they were trying to commit fraud against them just as fast as possible, get as much money as they possibly can. The funny thing, though, isn't the fraud ring itself, which isn't all that strange. It's the lady that they stole the card reader from. We initially worried it was her doing this when we sort of started reviewing this activity, but we realized actually through looking at her online and her company's Facebook page and a few other things that she'd been burgled and all her equipment had been stolen along with her card reader. So we actually were able, off the back of this sort of compliance-oriented SMR investigation process, we got in touch with her and we took a few details to enrich our SMR, such as the police report. So look, we got in touch with this lady. We took a few details to enrich our SMR. But what we were also able to do, which we wouldn't have been able to do if we weren't looking for bad guys, is get her a complimentary card reader shipped out ASAP to help her get her store up and running again and to get her back on her feet, because taking payments was really quintessential for her getting back up on her feet. So I'm actually really proud of that story, even though it's not some sort of salacious one about a huge criminal underbelly.
It's rare that you hear the customer's experience.
Exactly.
Yeah,
I like telling that story because when you sort of gather at compliance functions, everyone sort of talks about the biggest, baddest bad guys that they've caught, and we've all got those. But this story is good for telling other people so they know that we're not anti-customer, we're pro-customer, we're just anti-criminal.
Yes, so key. You mentioned earlier taking on a risk-based approach. We know the FATF recommends a risk-based approach to AML and CTF. So what does it actually mean to calculate risk? And what sorts of considerations are necessary to ensure that risk is actually adequately recognised and consequently mitigated?
Yeah, that's like a whole podcast in and of itself, right? But just to answer at a very high level, risk assessment's the bedrock. If you get that wrong, you get everything else wrong. We build everything on that. So calculating risks is difficult, but to distill it, you could basically say it's asking a series of questions over and over again. Who are our customers? What do we actually want to offer them? How are we going to do that? And what kind of crimes could they commit if we aren't careful? It's essentially risk assessment distilled to its core components. And of course, you need to be a little bit more hygienic in how you document this and be informed by the regulatory guidance and current sort of trends and things along those lines. But that's sort of the long and short of it.
Do you think that, or do you have any suggestions, I guess, about how we can ensure that AML compliance training is effective?
I've got lots. This is one of my favorite topics. There's this tendency, unfortunately, with compliance to make things dry and boring, which I personally hate. People are busy and they'll remember you and what you train them more if you make them laugh, feel, and think. So with that said, here's 3 things that I recommend for anyone that's trying to train people in this. Number 1 is use examples. It's so much easier to get a point across if it's illustrated with a relatable story. Number 2, get them to do something and feel like an investigator. That's a novel experience for a lot of people that you'll be training. If you allow them to sit back and sort of let the training wash over them like a podcast or something, it'll be in one ear and out the other, unfortunately, because you want them to really take away key learnings. It's not training for the sake of it. It's not checkbox training. It's actually training them to help you manage risk and recognize risk when it pops up. So get them involved in active discussions and activities. You might have some people that are reluctant to do it, but I've never really found people push back too much on it. And generally speaking, they tend to go down really well. And then 3, look, try and avoid PowerPoint, overly long technical explanations, that sort of thing. Make your cases relevant to your audience, but don't try and construct some sort of crazy narrative that's going to put them offside when they're thinking about like Breaking Bad or the Ozark or anything along those lines. So you need them to understand, but you should try and make it interesting and simple to understand and give them some real key takeaways so that they can actually go and implement that in their day-to-day work.
Yeah, they're all really great tips. And I think there's definitely something to be said about outdated PowerPoint slides. We can certainly all relate. Do you think that the future of compliance, KYC, CDD will increasingly make use of artificial intelligence?
I do. In fact, as this area grows, we're already struggling to keep businesses moving forward compliantly. We're already seeing the effects of talent shortages. So scaling by throwing people at the problem, it doesn't just cost too much money. We'll literally run out of people, right? A major Australian bank just partnered with the university to train people up. Obviously, this podcast is another example of universities getting involved, and that's fantastic. But we can't just throw more and more bodies at the problem. For instance, in neobank called Bunk, with a Q, won a court case against the Dutch central bank to allow them to use artificial intelligence and AML processes. I think it's a shame that it had to come to that. It's a bit of a breakdown in communication if anything ends up in court. But this is the kind of thing that we'll see more of, I think, firms adopting AI for AML. Thing is too, AI can be a huge benefit in actually being effective as opposed to just checking boxes, right? It's got to be implemented properly though. So we all know we tackle something like 2% of financial crime, maybe less globally. And using tech isn't just a way to save money. It's a way to increase the effectiveness. So we disrupt from way more than 2%, hopefully. That's where I see the real wins happening. Automating as much as possible that you've currently got skilled people doing and freeing them up more, and combing through data right now that just isn't doable due to resource constraints.
Yeah. Do you think there's any, risks associated then with using AI for these efforts?
Yeah, look, there's risks with everything. And I think that firms have to really acknowledge those risks and mitigate them, but they're more than capable of being mitigated. A couple of the big risks I see, I've got 3. So first one is key, right? It's explainability. You can't just say to a regulator, oh, the algorithm did it, and nor, of course, would you want to. So if you're going to use AI and great things like machine learning, you need to invest in people who can monitor their performance and, even more importantly, explain how they operate. If you can't, then there's no point. Second one, I think, is maybe more contentious. It's premature adoption. This one's unfortunate, but AI and machine learning are only as good as the data they use allows them to be, right? You can't rush into doing it if you don't have the data, all your ducks in a row, I would say. So you need to have a single source of truth about customers. It sounds weird, but even though that sounds simple, that's actually something a lot of institutions, especially ones that have been around for a while, they struggle with. They've got data all over the place. A customer might have 4 different profiles at a bank, one for personal lending, one for their business account, one for an auto loan, all of these things, one for card transaction processing, like I mentioned earlier. So if all of those don't feed into the system and really contribute to one single view of the customer, you can't really use AI or machine learning models because, you're not monitoring the customer holistically. And then third is actually training the AI and especially the machine learning. There's a corny joke that I like. I'm super popular at parties with my corny jokes, but it goes, what would machine learning models do if all their friends jumped off a bridge? And the answer is, of course, that they would follow right along. They would do the exact same thing because machine learning and a lot of times AI, they learn by watching what your operators do. So when you need to train them in what a good investigation looks like and what crime looks like, you need you need to actually have the true data for what those things are. So in real world examples. And if you have them mimic your staff, which is how most firms go about this, staff are going to investigate things differently to how AI and machine learning models should. So it's flawed from the get-go. You're building in that human element to your AI and ML models. Because, for instance, the alerts that you do on a customer are generated by not only what we think crime looks like, but to make sure that we don't go through way too many alerts, have way too many false positives. Whereas that's less of a problem if you're going to outsource more of that sort of baseline sort of investigative work to an AI or a machine learning model. So you don't necessarily want to train them with what you've got existing already, because you've built that for more of an analog world. So you don't want to just teach them to do that digitally. Yeah. The idea should be really clearly articulated to management that this isn't it's not really a cost saving. It's more of a force multiplier and an effectiveness multiplier. AI and machine learning, they shouldn't be just taking over what your staff do now and continuing to disrupt that 2% that we talked about earlier. And that's in my view when regulators would be right to question if you're actually doing enough. And if you want to have these technologies pay off against financial crime, you better sort of make sure that these things are all accounted for and you do it properly. And many organizations are moving in that direction and doing it well, but these are things to sort of take note of.
Definitely. I think it's certainly a collaborative effort if it's going to make a significant difference for us. So yeah, excellent to have you, Luke. Thanks again for joining us.
Thanks so much. Real pleasure. Thank you.
The Financial Integrity Hub's research equips Australia and the international community with the knowledge, tools and insights to understand, identify and disrupt illicit finance threats. If you're interested in seeing more from the Financial Integrity Hub, don't forget to follow us on LinkedIn to see our posts and events. We post a few times each week on breaking news and the latest research. We would like to thank Dr. Doron Goldbarsch for his academic advice and Isabel Nicholas for hosting.